Hello friends, today's topic HUF, Hindu Undivided Family, an excellent method to reduce tax burden. I am Dr. Bharath Chandra. Purpose of the video is service to society and financial education. The income tax rules provides people to avail various tax deductions to reduce the overall tax payment. Unfortunately, there is lack of awareness among people on many such provisions. One of the most well-known ways to save tax for individuals investing in Section 80C deductions such as insurance, PPF, post office deposits, etc. There is one very important concept in Indian tax laws which has been available for all Hindus since a long time but is known by very few people only. This is the concept of Hindu undivided family called HUF. We had been suggesting it in our workshops whenever we discussed about tax planning. Recently, Zerodha founder Nitin Kamath has created some awareness about it too. Hindu undivided family, known as HUF, is recognized as a separate entity under Income Tax Act 1961. It holds its own permanent account number, PAN, and files tax returns independently. It is usually incorporated for its tax benefits. Now, who is eligible to form a HUF? A married Hindu male can form a HUF. Members of the family, including the father, his wife, children, their wives, and their children, will be members of this Hindu undivided family. Buddhist, Jain, and Sikh families are also eligible to form HUFs. It can be formed the moment a Hindu male is married. There are two categories of people in a HUF. Number one, the Karta. The eldest male person of this Hindu undivided family is called Karta and he usually handles the affairs. He has to apply for a separate PAN as a Karta. With the consent of the other members of the HUF, a junior male member can also be the Karta of the family. 2. The members. People other than the Karta are the members of the HUF. The wife, the sons and unmarried daughters can be called as members of a HUF. Even a father and his unmarried daughter can form an HUF. The wife and children of the Karta is called co-personer. A wife or husband of the co-personer is a member but not a co-personer in that family. Only co-personers can ask for partition of the property. This means that the husband or wife or the son or daughter of the Karta of HUF cannot ask for partition of the assets of the HUF. Only the co-partners can demand such a partition. HUF is a separate entity from its members. So the income which is brought to the common pool by its members or the income which is generated from the assets in the common pool which also be taxed separately as HUF income and shall not be taxed as members' income. Now, who can benefit from HUF? A. If you receive business income, instead of receiving it in your personal name, you can receive it in the name of the HUF, hence reduce tax implication. B. If you receive rental income, you can transfer the asset in the name of HUF and then claim income in the name of HUF. C. You can even make investments in the name of HUF and receive dividends, interest and capital gains. If you have only income from salary, you may not be able to take much benefit since salary is paid only in the name of an individual and cannot be paid to HUF. Steps to form an HUF. 1. Create a HUF head. HUF deed is a written formal document on a stamped paper stating that the names of the Karta, eldest member of the family, and the co-personers family group, and the name of the HUF is the name of the Karta followed by HUF. Step 2. Apply for PAN and TAN. Step 3. Open bank account. To ensure that you are doing it right, please take the help of a chartered accountant or auditor who will guide you and assist you in the process. There is a debate on whether a HUF can avail tax benefits immediately after marriage or only after a child is born or adopted by the family. It is best to consult a CA to get complete clarity based on present tax rules. Once the separate PAN has been obtained, the Hindu undivided family will be required to file income tax returns every year, just like every other individual. Tax will be applied to HUF income, the slab rate which is applicable to individuals. HUF will also enjoy the basic exemption limit of Rs 2,50,000 which is available to individuals. HUF can also claim deductions under 80C for investments made in eligible instruments. Since HUF is a separate entity, the overall tax liability to the family can be reduced by efficient planning with the help of HUF. Now, basic tax exemption limit. Old regime, considering the tax rebate, personal income 5 lakhs, HUF income 5 lakhs. New regime, personal income 7 lakhs, HUF income 7 lakhs. So if you plan properly, you can claim tax exemption income up to rupees 14 lakhs per annum in the new tax regime. If you don't form an HUF, then it will be only 7 lakhs per annum. So basically, by forming a HUF, you will be able to claim a higher business income, rental income without needing to pay much tax. We have provided simplified information on HUF. Read more about it online and consult a CA to understand how you can take benefit from it. Now, at the end of the video, here is the question. Were you aware of the concept of HUF? You can either type yes or no. In case you are not the member of this channel, this is the time to subscribe. Press the bell icon. Send the video to all your friends. The video is good. Press the like button. Thank you for watching. Bye bye. All the best.